is up, everybody? Warm hello. Hope everybody's doing well. Thank you for joining me here today. This is part of the free version of my third book, Trading Quotes, A Daily Dose of Trading Wisdom, available on Amazon right now. So I just published my fourth book, which is Trading Journal, why you should use a trading journal, how to fill one out, and the reviews are in. People are loving it. I hope you consider checking it out. And when I publish a new book, I like to make my last book free. So that's what I'm doing. This is going to my YouTube channel, which is Ched's Trading. Hopefully you've seen my other stuff. It's Trading Quotes, A Daily Dose of Trading Wisdom. I want to make the whole book for free. So essentially it's 52 weeks, one quote a day, one quote a day, 7 days a week, 52 weeks. And then I do like a quarterly wrap up with my favorite tweets. So we got 9 and 10. We're going to do 11 and 12, which means next time we'll do the quarterly review, which will be kind of fun. So I'm looking forward to that. I want to remind you, of course, I'm on Twitter at Big Chez. That's where you can find me, the Trading Journal. If you're looking for an exchange, check out BingX, my favorite exchange. Bitcoin Live is the best team in the world that studies crypto, and I'm a founding analyst. I've been doing market updates there, going on 7 years plus, and I do it every Wednesday and Sunday night, and I haven't missed a report in over 6 years. Rain or shine, I'm sick, I'm on vacation, I'm traveling, whatever. So I never skip. Hopefully you consider checking that out. Check out the rest of my great stuff on my YouTube. I try to put out a lot of free content. Start with the masterclass tutorial playlist if you're looking to learn how to trade, Japanese candlestick theory, classical charting. But let's get to it. So, of course, this is Trading Quotes. Going to go into the playlist Daily Dose of Trading Wisdom, Trading Quotes. And let's go right to it. So we're going to do weeks 11 and 12. All right, let's get that done. Weeks 9 and 10 last week. So this is fun. It gives me a chance to expand on these quotes. It's a good companion to the book. If you have the book, thank you. But I like, the ability to riff. So week 11, Monday. The best trades are born out of preparation rather than desperation. So if you're having a tough time trading, you've been losing money, you're struggling, you're going to be thinking, man, I just need to get that money back. I just need to find a way to get back. And what you'll do is you'll force the action. And those are some desperation trades where you're just trying to get back to even. You're just trying to repair, your trading day. But it's really preparation. It's about being ready for volatility. It's about having a curated watch list, 10 or 15 plays that you know well, in and out. And you've studied them, you have muscle memory. And when opportunity presents itself, you are able to take advantage of it. You're able to strike. So the best trades are out of preparation rather than desperation. Tuesday, ask yourself, am I buying the rumor or am I buying the news, right? And things tend to rise in anticipation. We know there's some type of a forward-looking event. We know something is going to happen, or we think something's going to happen, and the price tends to rise. Gains appreciate. And what often happens is when the news comes out, sometimes there's a little bump, but often there's a selling off afterwards, right? Because people have been buying in anticipation of the event. Then the event comes out, and it's like, well, what's next, right? Because markets are forward-looking, generally speaking, right? So you want to make sure you're asking yourself, am I buying the rumor or am I buying the news? Because oftentimes the rumor is when there's momentum and the price is climbing, and you're generally better off buying the rumor than the news. Because news is often for selling. It depends on the market, the security, the chart, the token, the stock, whatever you're talking about. News releases come out oftentimes are timed with selling shares, with distribution. So you want to buy the rumor, not the news. Wednesday, it's okay to keep making mistakes as long as they are new ones. So this one ties right in with the trading journal. It's basically why you should use a trading journal. Every time you have a failed trade, there's a residue of value left over. It's what you did wrong and how you can prevent, that from happening again. And the key thing is you don't want to keep making the same mistakes, right? If you make a new mistake, that's okay. That's a new lesson. That's a new opportunity for you to grow and learn. So new mistakes offer you an opportunity. Old mistakes just mean that your discipline's lacking. It just means that, it just means you haven't found a way to improve, and you haven't really paid attention to or properly learned the prior lessons. Okay. Thursday, embrace the hurt, embrace the frustration, find a way to keep fighting, and next time, get a few more punches in. So this is motivational. It's basically saying that, trading is going to be really difficult. I think we all know that. And the hurt and the frustration, these are certainly part of it, right? No doubt about it. And you embrace them because it's part of the journey, right? The frustration means you want to do better, use that energy to fuel you, to get better, right? And what you want to do is keep fighting, keep trying. And next time, the next opportunity, when I say get a few more punches in, it basically means get a little bit better. You want to get a little bit better slowly over time, get a few more punches in, and that's going to be the way to make it in the long run. Friday, the more I trade, the less I use indicators. They just take your focus away from the price. There's this interesting evolution of a trader where they start out with, when they're very new, they start out with, a basic setup, and they start to add things. And, they watch some big account videos, or they read something. They think, oh, let me add this. Let me add the DI plus. Now let me add the stochastics. Now let me add the volume profile. Now let me throw a Fibonacci extension up there. You just keep adding things. You keep adding indicators, RSI, OBV, Williams, MACD, chalk and money flow. You just keep adding indicators. And what it does is it kind of dulls your senses, right? Because the price is really all you need. You can actually see things like accumulation and distribution in the price. You can see it. I've talked about this many times on my YouTube channel. You can just see it, for example, by looking at the volume. Is there more volume in the green candles than the red candles, right? That's accumulation. So you can see things like the on-balance volume. You can see how the price is consolidating, and you can get kind of a general sense of what the RSI is. So there's really nothing that these indicators can give you that, you can't just see yourself by looking at the price. You want to focus on the price and focus on key interaction with key price levels in terms of what the price is doing, right? And that's going to be the most important thing. Don't let anything take away your focus from the price, okay? Saturday, and this is a big one for me, it's a Japanese candlestick enthusiast. Looking at candlesticks without volume is useless. The strength of every candlestick signal is based on the volume behind it. For example, after a downtrend, a hammer candle at the lower Bollinger Band with weak volume is a weak signal. So the whole idea with candlestick signals, okay, is that it's a short-term signal and you're reversing a trend. So if you have, for example, a bearish engulfing, you have a move up and then you get a big candle. If there's medium volume, and bigger volume, and then just minor volume on the engulfing, and this is just these are just lines. It's not a true candle, of course. But if there's not as much volume on the engulfing, it's not a strong signal. But on the other hand, if you had really, really, really strong volume, and ideally, 1.5 times the volume, at least of the prior candle, that shows the force has been met, that the bull force has been squashed. It's been encompassed, right, by this outside bar, by, even candle body, by bearish engulfing the momentum, right? A hammer candle will move down, and you get your hammer. You want big time volume on the hammer candle because it suggests that bulls have stepped in, and you need volume to reverse a trend, right? When the price is already trending, there's already an imbalance in supply and demand. You don't need volume, but you want volume to reverse a trend. And the whole thing with candlestick signals is you look for the volume behind them to show you how much juice, how much momentum. It's just the multiplier of how important that candle is. So when I see people posting candlesticks without volume, I think to myself, I'm only getting half of the story here. You need the whole story. You need the whole picture. Sunday, if you're having trouble trading, chances are you are working against the trend. In an uptrend, buy the dip. In a downtrend, sell the rip. It's that simple. Okay. You want to position yourself to trade with the trend. It's one of the most important things I've learned studying TA with CMT, reading textbooks. And from experience, for sure, most of my losses, like 90% of my losses, that's a big number, have come from playing like a reversal, like a bottoming chart and guessing and saying, oh, I think this downtrend's reversed, or I think this uptrend's reversed, right? It's a fool's errand. You want to wait for a dip in an uptrend or wait for a rip in a downtrend. It's really important. You want to trade with the broader trend. You want to take advantage of a move against the trend. Week 12, Monday. Staring at the charts all day will make you blind. I guess I'm blind at this point. Put down the phone, turn off the computer, and go for a walk. This is just one of those things where we tend to sit there, we're scrolling, we're bored. It ties in with boredom trading. It's a little bit too. You might be over trading, so you're watching the chart. Now you're dropping to a 5 minute, to a 1 minute. You're looking for some action. You're looking for something, right? And the idea of put down the phone, turn off the computer, go for a walk, get a little bit of perspective, go outside, get some fresh air, do some push-ups, do something to mix things up, to get some perspective. And because if you're just looking at the chart, you'll lose focus. It's one of those things where it works. Maybe it's the same for you. If I'm doing several projects, if I'm stuck in a project, I like to walk away and do something else. And when I come back to it, I usually have a fresh perspective. So if you just look at the chart the whole day without taking a break, it's gonna dull your senses. Okay. Tuesday, when panic hits the market, it's time for you to go to work because other people are making mistakes, offering you the opportunity to capitalize. So panic hits the market, we get volatility, and you go to work. What does that mean? You're taking advantage of it because you've already marked out your charts, so you know how to contextualize the volatility. You know what it means when the price drops to a certain level, and you can take advantage of that, right? So other people are panicking, they're selling the bottom, they're panic selling the retracement, and you're jumping right in, and you're saying, you know what? I think there's something here for me. It actually looks better that way, but that's a fine. It works. You're saying I'm going to take advantage of this dip because I'm prepared and other people are not, right? I'm going to go to work because I've been waiting for this retracement. I've been waiting for the price to come back to this level. And now I'm going to strike because I'm ready and other people are freaking out. And that's just the bottom line. You're going to work because other people are panicking and they're making mistakes, and you can capitalize on that. And it's a little bit PvP, I get it, but it's like with sentiment. Like sentiment is the worst at the bottom, is the best at the top, and you kind of take advantage of other people getting overextended, people getting a little bit, too excited and all that. Wednesday, if you mark out, and this is exactly, these pair well together. I wonder if I did it that way ahead of time. If you mark out your chart levels ahead of time, there is no room to panic because you are prepared for any scenario. So the people in the tweet before on Tuesday, they were panicking, but you marked out your chart levels. You were ready. You have muscle memory. You understand what it means for a bullish chart to come back and retest the peak of a prior consolidation range. That's a throwback. You understand a good opportunity when it comes because you are ready for it. And you said, okay, well, if this happens, I'm going to jump in. I'm going to manage my risk. I'm going to define my risk based on this level. you are prepared for any scenario. It breaks out. You know how to play the breakout. You know what the breakout level is. You know what the price structure is above. So you're prepared. You're not panicking. Preparation is incredibly important. Thursday, the bottom is when you want to sell because it's going to zero. The top is when you let your guard down because it is on fire and it will keep running. Why wouldn't it, right? Be mindful. So the key phrase here is be mindful. And again, to plug my book, I think it's a wonderful book, The Trading Journal. Okay. Be mindful is emotional mindfulness. And that comes from when you enter a trade, okay, what goes into a journal, right? When you enter a trade, emotional mindfulness, it's kind of stopping yourself and saying, wait a minute, am I excited here? Am I scared? And just being aware of your emotions without judging them, just observing them and training yourself to be aware of your emotions. And it's one of those things where the bottom, you want to sell because it just feels like it's going to zero. Everyone's panicking, but that could be a sentiment bottom. There's a pretty good chance that that's a sentiment bottom. So you want to be aware of sentiment, of the market sentiment and your own sentiment, and be careful, be careful here when something is on fire and just feels like it's never going to stop running. I think that's when you want to be extra careful. You want to be mindful and use your emotions and use that awareness of your emotions as a tool, a very important tool. Friday, it's okay not to chase every play you see. Stay focused and be the master of your watch list. This could be underlined and bolded, your watch list, right? You want to be a rock, not a blade of grass, right? Meaning you don't want to react to, and to mix my quotes, for those of you who know my book, I'm mixing quotes. You don't want to just react because someone else is talking about something and it's exciting. Oh, I'm going to go play that one. Ooh, that looks good. Let me go play that. You're going to get in trouble, right? First of all, you should only be playing things from your own curated watch list, things you've been watching, you've studied, you understand their broader trend, their minor trend, the consolidation, and the context of that volatility. So you don't want to chase every play you see. Just be the master of your watch list. Study those plays and take advantage of opportunity when it comes in your watch list, right? Play from your watch list, stay focused, and be disciplined. Saturday, if you fight the trend, do not be surprised if you lose, right? I fought the law and the law won. It's what I said earlier when I started, and even sometimes now I can get a little bit goofy and mess around and lose money on a reversal, guessing a bottom before it's been confirmed. And you don't want to fight the trend. You don't want to look at a really bad chart that just had a little bounce and say, "Oh, this is the bottom." It's trapping you because it's a move against the broader trend, and trends tend to continue. This is something you will learn and drill down if you study classical charting, Western TA, is that trends tend to continue. It's really important that you do not fight the trend. Okay, if it's an uptrend, wait for it to dip, jump in. If it's a downtrend, wait for it to bounce and take a short. Don't try to reverse the uptrend. Don't try to reverse the downtrend. Okay, Sunday. This is interesting. Your position size should be directly correlated to your conviction level and familiarity with the play that you are attempting to profit from. So the more you know a play, the more you've studied it, the more you have the muscle memory I talk about so often. The more you can size up into that play, right? And your conviction level, right? Your conviction level is important. If you don't have conviction, you've got nothing, right? Conviction means when you enter a play, if it goes against you just a little bit, but your stop loss hasn't hit, you stick with it. You stick with your plan and you see it through. If your stop loss hits, okay, you move on. Maybe you play it again if the trade idea is revalidated. But you have the confidence in yourself to execute your plan because you have conviction, because you know the play, you have familiarity with it, you've been studying with it. So you don't want to be going big position size into a play that you don't really know, you don't have a good feel for. That's going to get you in a lot of trouble. This is fun. So weeks 11, 12. I'll actually, you have 13 next time. That's interesting. 11, 12, and then I'll do 13. I just realized, let's do week 13 as well. I'm going to do a week 11, 12, and 13. And then I'll do favorite quotes for the next video. So week 13, trading Monday. Trading is not about being perfect, okay? It's about being good enough to survive and stick around for the next trade, right? You're still going to make mistakes, but you have to keep in mind that it's a long journey. It's going to take a long time to get to where you want to go. And you want to know that you're going to make mistakes along the way, but hopefully small mistakes you're learning from, hopefully new mistakes and not old mistakes. And you need to be good enough just to survive and stick around and get a little bit better on that next trade. Tuesday, week 13. Trying to guess when a downtrend will reverse is like touching a hot pot of water and over again until it cools down. It's like you have a hot pot of water, you're boiling, maybe you just made spaghetti or whatever, and you turn off the heat and you just touch the pot. Is it cooled down yet? No, you burn your hand. You wait 5 seconds, 10 seconds, touch it again, you burn your hand. It's like, it's still hot. It's gonna take time. Downtrends take a long time to reverse. You generally get multiple bites of the apple, to mix another quote. You generally get many opportunities to jump in, either on a diagonal break or a lower high break, or a lower low sweep, or some type of structure, some recapture, of lost support. Just don't guess, just wait, know that it's going to take time. Wednesday. Oh, I love this one. So Wednesday, week 13. Fear of losing money is the number one reason you are losing money. You enter a trade with a good plan, but as soon as you start to get a little bit red, or you immediately close the trade. And you get freaked out, and it's because you're playing with money you can't afford to lose. I mean, not that anybody can really afford to lose money, but you have to play with funds that you're risking, and you're knowing there's a chance you're going to lose the money. Hopefully there's a chance you're going to win the money too if you play it right. And you need to, you can't go play poker with your rent money. You're just gonna, there'll be times when you're supposed to bet and you don't bet because I can't put this $20 in. Even though you're supposed to bet, you have to play the game properly. And like in poker, you have to think about them like chips rather than money. It's the same thing with trading. You have to execute the trade based on your plan. And if you're just afraid to lose money, you're going to find a way to mess up because you're going to be too defensive, and you're just going to find ways to lose money. So Thursday, unlike children, the best trades do not require babysitting. It's just a fun one. Why? What are the best trades? Well, the best trades are where you waited for a low ball bid. You waited for the price to drop way down to a level that you weren't expecting, right? And with volatility, for example, like in Bitcoin right now, if the price, mysteriously or magically dropped down to 88.5K with volatility, you'd jump in you'd have a bid in there, low ball bid, and then the price would probably bounce. And when you get in at a low ball level and then you get a quick reversal and then you clear resistance, you can sit and wait. You can hold on to the trade because you were patient. And it doesn't require babysitting. Trades that require babysitting, trying to go long in a sideways channel, it's chopping around, playing the chop range. Trades that you have to watch at night and keep you up at night, that's no good, right? The best trades do not require babysitting. And children, even the best ones do, especially at a young age, right? Friday, week 13. This is important. This is mindfulness. And I talked about it with the Trading Journal. When you hit that buy button, are you excited? If so, that's a sign of FOMO and emotional over-involvement. You should be a cold, calculated sniper, detached from the mission at hand. You are a precision trader. You are playing the trade. You're not in love with it. You don't care what it is. You're just playing the ticker. You're not playing the quote unquote company or the project. If you buy the button, you're excited. Ooh, that's a mistake because you're playing for boredom probably. You're playing for fun. You're playing for that dopamine rush, that adrenaline rush. And you're probably doing FOMO. You're probably chasing something, right? At least be aware of it. If you're aware of it, that's an important first step, and you can kind of work on that moving forward. So that's why emotional mindfulness is very important. Emotional over involvement is no good. You want to be calculated. You want to be a sniper, a cold, calculated sniper. Saturday, week 13. A throwback is when the price breaks through resistance. And then after a period of time, comes back and retests that level. Throwbacks are my favorite type of trade setup because you are by definition buying weakness in an uptrend. Why is that important? Well, you buy weakness in an uptrend, you're buying a move against the trend. Again, for example, we're looking at Bitcoin right now. It is in the middle of, or it just had, and I had put out a tweet on this very subject just earlier today. BTC now throwback to broken right shoulder, where we had the head and shoulders, failure with the right shoulder invalidation. So you have resistance, it breaks through and it comes back and it tests broken resistance from above. That is a throwback, right? This is my favorite type of trade setup because you're buying weakness in an uptrend. You're buying at a well-defined level. You're buying a move against the trend. So throwbacks are great. It's a great way to position yourself. Of course, this is a trade idea, trade setup I talk about in the trading journal. And then I talk about, what it would mean for that idea to fail so you can define your risk. Sunday, week 13. Anyone who says that rules are meant to be broken clearly has not tried to trade for a living. And this is important. Anyone who's made it or anyone who is practicing as a full-time trader, they know they have rules. They have risk management rules, what they do before they enter a trade. Ideally, again, using a journal, the rules of using a journal and learning from mistakes and buying dips and uptrends and selling rips and downtrends, trading with the trend and, double checking before you click buttons because you can move too fast, buy the wrong amount or buy when you thought you were selling. You can do all sorts of stuff, certain rules, things that you have, risk management practices that keep you out of trouble, knowing that you need to take many trades over a long period of time, knowing that you'll fail at many of those trades, but you can manage the risk. Those will be small losses, and those rules will help you survive, right? So anyone who says rules are meant to be broken clearly has not tried to trade for a living. This has been weeks 11, 12, and 13. I'll do favorite quotes part 1, which will be kind of fun. I'm looking forward to it. This is Trading Quotes, a daily dose of trading wisdom. This is my third book. I published this back in late 2022, December 2022. And I have now put out a brand new book. Which is The Trading Journal. I'm super proud of this. It's available on Amazon. This is why you should use a trading journal, how to fill it out, good trader habits, emotional management. And the reviews are in. People love it. And thank you for that, folks. So because I've got a new book, I'm making my third book free. It's what I like to do. I've already got a free version of Trading Wisdom. My entire cancer memoir is free. You can check that out. And this is going to go right into this playlist. Trading Quotes, a daily dose of trading wisdom. Folks, check out Bitcoin Live. I'm a founding analyst. I do a twice a week full market report. I'm really proud of that team. I've been doing market reports there for going on almost 7 years. And twice a week you hear from me no matter what. Check me out on Twitter. Check out BingX if you're looking for an exchange. And soak up all that great free content, all those videos that I have on my YouTube channel. I think you'll enjoy that, starting with the Masterclass tutorial playlist. So what do you say we finish it off with a little bit of Church of Eight Wheels, and we will go from there, my friends. So thank you again, everybody. Appreciate you listening. Peace out, everybody. Thank you so much.